Jerry, welcome back. I still think Dixie goes 109, Steve. All right, Jerry, great to have you back. Let's follow the money together. How have you been, my trading warrior brother?
Doing great, Dale. Great to be
Yeah,
here.
well, you're along the world. I know you are.
well, been pretty long. I mean, yeah, I've been pretty long on the S&P, the Nasdaq, Bitcoin, things of that nature. I mean, it's been working out. Uh,
Okay.
but but we take more of a longer term view. But certainly we do some tactical trading and things like that as well.
Okay, so has the red wave changed anything for you or made you more aggressive with what you've had? Maybe you want to share the screen and show your great work.
Okay, thank you. Yeah, let me go ahead and I'm going to share today.
Jerry has beautiful technical work.
Oh, thank you
Oh,
for that.
there's
Jerry's
your
weekend. Yeah, Jerry's
Jerry.
weekend charts. So you can go to
Oh, okay.
followthemoney.com/charts. And
So
here,
I should join because once football season's over, on the weekend I'd have something to do.
you will have plenty to do. That's exactly
All
right.
right,
you,
man.
you'll get lost on this website. There's a
All
ton
right.
of stuff here. But yeah, I mean,
Look at
overall, as
that
far
wedge.
yeah, isn't that something? It's getting nice and tight.
Yeah,
The red wave, a little bit of a surprise because
yeah.
the way that
Poles.
yeah, the way the polls read and everything, the market also seemed to be caught off guard, which was unusual. I mean, you could see in some markets that there was some expectation of that, but it was really the night of the election where you saw Bitcoin
Yeah.
really begin to surge as it became evident that
Trump
Trump had
trades.
the Trump trades exactly. And then we
Yeah.
saw, of course, clean energy get crushed. All the usual suspects, the banks, went wild. I mean, think about what this means for you and I for the next 4 years, or for all of us. Financials are going hog wild because they know that regulation is going to be tepid. The gatekeepers, the overlords, so to speak, are going to be looking the other way, and so concerns about, for example, Visa's high interest rates or any of these things that were coming under scrutiny are now just not a problem at all. So for the next 4 years, I would imagine you're going to see, lack of
Different
regulation.
problems. Different
Different,
problems.
exactly. Different. It's a perfect way to put it. Different problems. And overall, though, I mean, I have to admit, despite that, I'm, or maybe because of that, it's hard not to be bullish on several of these markets.
Well,
So,
I don't know. I could push back a little bit on that, Jerry.
sure, go ahead. Go ahead.
Okay, I'll give you four letters, NVDA. It was the comet of the year last year and the year before was a parabolic move, and the video looks like we're holding on by a thread if you have a chart of it. And not that I'm against AI, because I think we're going to need a lot of AI in at the Fed, at the Treasury,
Hmm.
and
Yeah.
the new administration. Human intelligence isn't enough. They'll need plenty of artificial. Uh, anyway, so there are some cracks in the market, and I mean, do you think that we just melt up to 7,000 S&Ps without an interruption?
Well, I don't know about that. I mean, let's take a look at Nvidia for example, because I think Nvidia, you make a great point. There are some overheated trades, but although when you look at this particular
So monthly,
stock, yeah,
yeah.
this is a monthly, but when you look at Nvidia, say like on a forward PE basis out, like say in 2026, it's actually trading cheaper than Apple, uh, which is
Wow.
really which is really quite something. The underlying fundamentals of this company are just off the charts. But you're right. I mean, we go through all these different cycles. How long will Nvidia last? I think that what we saw here was a big hardware part of the cycle. If you listen to a lot of the smarter guys than me out there, they're basically saying that next year is going to be more of a software cycle. So you think of those
Yeah.
companies, like
Yeah.
Snowflake and others that are starting to pop,
Right.
they're going to benefit from AI. But yeah, you can see a little bit here. You can start to notice the last several monthly charts. They're getting a little bit, funny. Whereas before you had these nice big, kind of juicy candles. Now they're starting to get a little skittish. as you can see. And
And
this is a
volume has been declining all summer, it looks like too,
yeah, you can
into the
see that
fall.
volume coming
Yeah.
down.
What's
Yeah,
the
and
blue line? The moving average? Okay.
that's the moving average on the,
All
yeah.
right.
And
Okay.
anytime we get this overheated, I like to take gains. I had a big strategy where I went long on Nvidia back in 2022, right after the Ethereum kind of crack up, where Ethereum moved to proof of stake, and then they didn't have mining anymore. So people said, "Oh gosh, Nvidia is dead because Ethereum is now no longer proof of work." And I saw, and I had always wanted to build in a position in NVIDIA, and I had felt like I had missed the boat. It was never a core position of mine. So in 2022, I'd started building a nice core position in it. And then I did better than I expected, of course. I didn't expect it to do this well this fast. I started pruning, though, this year. I started pruning some of that.
That's a lot of patience, Jerry. Congratulations, because it's one thing to make the call. So you saw the call and you
Yeah.
made the call. That it's better to make the trade. And what's better than the trade is really to have the patience for the hold. And I'm always really impressed with people that can sit and hold a winner and not be tempted to take money off the table. So nice trade if you're pruning now, because
Yeah.
I think there's a shot for a pretty good break in Nvidia, and isn't that the second highest market cap on the board, Nvidia? So
I think
goes
it.
Nvidia. Go ahead.
I think it's the number one. I mean, the last time no, it's
Okay.
number two now. No, you're right. Apple retook it. They've been flirting back and
Oh,
forth, I guess, when it pulled
okay.
back.
So I
But
mean, if we get a break back towards 100 and that look, 110, that area, I can't see the market being able to absorb it through rotation. Can
yeah,
you?
perhaps. Well, not necessarily. However, I think the tech trade is going to work under Trump. In fact,
Because
tech
of
and
Elon?
yeah, I think well because of that, and I also just think because of the innovation. I think we're just in this cycle here. Here's my thesis this decade. My thesis is that we are going to have kind of a repeat of the 1920s, where we're already kind of seeing
Oh,
it start
roaring, like
starts
roaring
off,
20s.
yeah, in irrational roaring 20s. So
Hmm.
I expect that this is kind of an early part of the foray. I think the next 4 years, as we were talking at the top of this conversation about the lack of regulation, or the thought that there won't be any regulation or they won't have to worry about the teeth of regulators or whatever is going to cause just a lot of excess. And I think for those who own assets in this environment, if they're smart, they sit and they just kind of, and of course, at some point it all comes crashing down. I mean, you and I both know it's a house of cards. It's at some point it's going to have to come down. It's built upon faulty stuff. But the innovation just keeps going. Even if you go back to the Depression, even in the wake of the Roaring 1920s, you see that innovation didn't stop. In fact, it accelerated during the Depression. And so,
Yeah.
I look at innovation as really kind of propping this up. And I think we have so much liquidity now. We're in this easing cycle, which is going to last, I think, for the rest of this decade, albeit probably a couple hiccups along the way. I just think that we're probably going to see a lot of boom before a really big bust. And I think that it behooves people to be exposed, especially for the next at least 2 or 3 years. I mean, if you go back and look at Trump's first uh, term, for the first 3 years, the markets were going up pretty good,
Yeah.
and then it just all crashed and went, and came down. But it was at that moment, it was really at that moment, Dale, that I think my eyes were opened. It was in 2020. It was in 2020, and I had been investing since the late or mid to late 90s. And I had been through several cycles. I went through the 2008 crash. I went through all that stuff, the dot com bubble, and all this kind of stuff. And so when we got to 2020, and I saw the market implode, and I saw Trump standing on the stage at the White House, in the press area, and he clearly had no idea what the hell was going on. I mean, you could see it in his eyes. He didn't know what was going on, and that freaked me out because I thought if he doesn't know what's going on, then oh my gosh. And so I didn't really know what to do with my investments at that time. I went to cash. It was right at the end of February when I was looking at his eyeballs on TV, going, "This guy doesn't know what's going on." So I started just selling stuff, and it turned out to be a great time because in March, of course, the bottom fell out. But then I immediately said, "Well, I got to get back in now," because I knew they were going to step in, and they stepped in with a vengeance, Dale. They stepped in with a vengeance to the tune that you have never seen, and it happened to be an election year that helped. That helped the cause. But so 2020, they backed up the truck. They did everything they possibly could. They threw everything at it, and there you go. That's what they're going to do the next time you see a crash comes. In other words, this is what we have to learn. We have to learn that the powers that be are going to keep this gravy train a rolling as long as they can, no matter how much it hurts. They're going to do it, and the people who own assets are going to benefit, and the people who don't are going to get hammered. And I think that's just the story we've learned for the last 20, 30, 40 years of this fiat experiment that we're in. They're going to blow it up at some point. They won't be able to fix it at some point. But right now, they keep doing it. So right now we're starting to see M2 money supply going back up. Of course, the rates are starting to well, they're trying to push rates down anyway. And let's maybe take a look at the dollar here for a minute, because I know you guys like to focus on that. I do too. I really focus a lot on the dollar.
Well, okay.
Yeah, well, you
Yeah.
go ahead. You want to say something?
No, no, no. Let's talk about it. Go ahead.
Well, the dollar has, I've been using this chart now for quite a while, and this particular chart is really helpful for me. But as you can
Yeah.
see, this 106 to 108 region here on the screen, let me zoom in just a bit. There we go.
Yeah.
106 to 108 area, we actually tapped out the top of that 108 area and then rejected it. The value, by the way, the price of the dollar index right now, this chart's just a little bit dated. It came from Friday, but it's about 106.75. So this is a pretty good representation. It's stuck in this
Yeah.
box right now.
Right.
And for me, I didn't expect it to get back above 106. I certainly don't expect it to get above 108. And here we are. What do we do? And the Fed is, of course, expected to cut rates again next month on the 18th of December. And if you look at the CME Fed watch tool right now, the expectation or probability of a rate cut is about 60%, just where it was a couple of weeks ago. So there's still a majority probability of a rate cut, and yet this dollar just keeps going up. And there's a few reasons. I think it's the tariffs. I think it's the Trump trade. I think it's the anticipation that Trump is going to be obviously America first. That's good news for the dollar in some ways. But when you look at the Trump, in fact, I encourage anybody, especially you guys, because you guys look at this a lot with the currencies, go back and look at the currency. I don't have a chart here in front of me, but if you go back and look at the currency of the dollar,
Yeah. It peaked.
it peaked right into his inauguration the first time. So he was so when he won, the dollar started running, and then as soon as he literally started getting sworn in, the dollar started coming down, and I mean it came down with a vengeance. It was coming down for quite a long time. So I think we may be seeing something similar. This is kind of an enthusiasm, it's a optimism, and you're seeing the dollar rally, but there's really not a reason for this. I mean, when you think about, the rates are supposed to be coming down, the Fed's on track to do it, and we have a $36 trillion national debt now. I'm expecting at any point.
How low do you think 10-year yields could go on this cycle? Because I don't think we'll trade much below 390. I don't think we're going back to those lows. Do you? Going back to
Really?
360?
I think so. I think we
Yeah.
will. I really do. I think we will. But the problem is what complicates that is that I also expect, and this is going to make it difficult for rates to go low,
There's
is
supply
well, yeah, and also
deficits.
yeah, and of course the inevitable outcome of that, where we could have a rating agency. I'm expecting any day now, a rating
Okay.
agency to come
Downgrade.
out. Absolutely, just
Oh,
total reckless. I mean,
yeah.
if you look at the expectation of the Trump spending, I mean, it's just absolutely positively absurd. I mean, it is
Yeah.
beyond absurd. And so the fact that we have, I don't want to get political here, but I mean, come on, it's a kind of a joke now, isn't it? I mean, the libertarians and the conservatives and the it's a big joke. I mean,
Yeah.
nobody believes it anymore. So the point is that we are running amok. We got, deficits galore. Both parties don't care. and the people who are voting don't seem to care. We never even heard the
No
word. We never even heard the word national debt during the entire 2024 uh, presidential
campaign.
campaign. We didn't
Yeah.
hear it. It didn't even come up at the debates. A $36 trillion national debt. Dale, somebody's got to do something about it. Now, you would say, well, if you're worried about that, why do you think rates are going to come down? Well, I think that the government right now, this is the first year that we have spent over $1 trillion in interest payments. This is the first time. We've never had a year where the United States has spent more than $1 trillion in interest payments. I think that they know that they're going to have to do something because the interest rates hurt the government in many ways the most because of their massive debt. So I would imagine they're going to be doing whatever they can creatively to get those rates down, fighting upstream to do it. Uh, and I know that President Trump is going to want that. I mean, heck, when you go back to the first term of
Yeah.
the Trump presidency, he was the
He was on Powell all the time to bring rates down. He threatened to fire him.
he threatened to fire him. He wanted negative interest rates, and you could only imagine how bad inflation would have gotten had we had to come from negative interest rates. And so, I would imagine that when Trump gets in, if rates are not coming down in a hurry, he's going to be blaming the Fed. This is one thing that Biden didn't understand. Biden could have been blaming the Fed, and the people would have believed it. The people would have believed it. They wouldn't have blamed Biden. They would have blamed the Fed. Biden could have been out there saying, look, here I am trying to have this great economy, and this Fed just keeps messing. Well, why do they keep raising interest rates? See, people don't know how inflation works. They don't know what's going on. So he could have blamed the Fed. And people would have said, the Fed, it's the Fed's fault. Well, see, Trump's a master in that. He's going to blame everybody but his own policy. So he's going to blame the
Right.
Fed. And so
Of course.
get ready to be hearing about how the Fed's the problem as soon as he gets in. But it's not been the problem up until now. It's been Biden. I tell you, the guy's he's a very good salesman. And
Yeah.
but for
Well,
but
let
for a
me ask you this. Now that
yeah,
we went there, Paul is really unrestrained now, right? He's not looking for another term, right?
right,
He's got a year left. They're not exactly, uh, there's no bromance between
right.
Powell and Trump. Maybe Powell uh, and some of his Fed governors are already coming out and saying, inflation is still sticky. Maybe he's not as accommodative as maybe even the market would dictate. For that reason, that he switches back to an inflation fight rather than supporting economic growth.
I get yeah. I mean, I guess that's a possibility.
I mean, it's his
But
legacy, right? What's going to be
it
his legacy?
right.
Does he's leaving in a year? Would you rather have your legacy be um, that you finally did something substantial about inflation, or even if you have a recession or runaway hyperinflation, that you leave for the next Fed chairman?
Yeah. Well,
Just
it's
something to think about.
it
What's his
is.
legacy?
What is his legacy going to
I
be?
mean, don't you think that personal feelings ever come into play on and affect policy?
I'm
Um,
sure they do.
I don't think that after his experience with Trump, he wants to help him.
Probably so. Probably so.
All right,
But at the
we'll see.
but yeah, yeah. We'll just have to see. We'll just have to see.
Yeah,
You see this dollar chart here. This one is the one that's just been pretty zany. I mean, you can
yeah,
see where it's just been real locked in between this 100 to 101, and then
yeah,
up here
for
106 to
years.
108. Yeah, just back and forth, back and forth. It's kind of zany. Well, now we're finally back up here, so something's happening. So we're actually starting to test the upper bounds of this. And again, what took us up here was the 9% inflation fight, and all this kind of stuff.
Uh,
So the dollar was surging. There's really no reason to see it hit back to these levels. I mean, I guess you could see it for whatever reason, but I
uh,
don't see the reason. So I do
yeah,
suspect we are going to see a breakdown at some point, and it may
yeah.
coincide with Trump's inauguration. And if that's the case,
Okay.
then you can get ready for, I think, could be a very nice
Commodity markets too, right?
tailwind. Yeah, tailwind as the dollar comes back down. All these markets can start to
So
move back
gold's
higher.
been correcting. Where do you want to buy it, Jerry?
Yeah, I like gold for the long term, of course. I like to just hold physical. Let me find my gold. Here's my gold
So
chart
yeah,
here.
what's your address?
123 Main Street.
All right, I'm bringing my
That's
my metal detector with me. We'll have
right.
lunch.
Yeah, there you go.
All right, buddy.
But but uh, but yeah, we got gold. As far as gold's looking, I think gold hits and goes on to hits another high. The problem was that gold had gotten on the monthly chart. I like to look at the monthly chart a lot to kind of
I
dictate where things are,
yeah,
and I don't
yeah.
have a monthly chart. I don't know if I have a monthly, or I have one right here. But anyway, so the monthly chart just got really out of whack, and I said, it's due for a pullback, but I don't think we're going to really fall. Remember, again, President Trump, one of the very best presidents in history for the price of gold, one of the very
Okay.
best. And so I
All
think
right.
gold is kind of correcting here after a
Right.
big long run, but it's not because of Trump, and it's because it was already due for a pullback. It was so overbought
Who's
technically on the
selling?
monthly. S-
Who's
Well, I mean,
selling?
the selling has been fairly muted. It hasn't been that excessive, but at the same time, it's just
Uh,
been a needed kind of
yeah.
a needed correction. But I think overall,
If you came in long yesterday, you would say it was excessive,
yeah. Well, there you go.
right? Anyway, but
There you go. All
I
perspective.
yeah, I agree with you on the gold. I just think, 23 and a half, 2400 is kind of my level, towards the end of the year or January. Do you
Okay,
think
yeah,
things
that's
can, do you think things can kind of, that December is a layup, that, everything's okay until year end, that there could be any surprises in December that, or, shake it up?
could be what I'm kind of seeing more of is probably a very nice rally into the end of the year.
Right.
Um,
That's the main narrative.
That's the main narrative. And I think next year is going to be another great year for assets. I think it's going to be another great year. You got to remember, too, that November is the month when the people who sell in May and go away, they come back. So you've got those fresh buyers coming back into the market in November. And then you also have people who trade based upon their politics, which is a big, big no-no. But many people have been sitting on the side because they've been fearful that Biden was going to bring on some sort of fiscal apocalypse. And now that Trump has won, you're going to start seeing more money flow back into the equity side. There's been a tremendous amount of money flow out of equities that's still not returned. I mean, we're still sitting on $6-7 trillion in money markets. Okay, that's a
Yeah.
very large number, and
Okay.
historically, and so that money is going to flow back in, and you know, uh,
When they're not getting 4 or 5%, when they're
when they're
getting,
not,
right.
exactly, and I think that's
Got
going
it.
to it's going to juice these markets. That's going to be the rocket fuel plus the AI narratives plus the crypto cycle plus the
So
dollars
maybe
coming
they should
down.
lock in these rates with, going out, and most people are bearish duration with, the yield curve moving from being inverted
Hmm.
to, yields starting to, the back end is having a harder time rallying, except for yesterday. Do you have a view on the bond market? Maybe we
Oh,
could wrap it.
I'm not a big bond guy. I mean, I certainly understand the markets as well as I could. I mean, there's a lot of guys who know much better than me. I think overall that bonds are going to head higher. Bond prices are going to head higher over the next few years as the rates normalize.
Okay.
And I and so I, but again, I would probably be looking at high grade corporate bonds. I like Vanguard's long term corporate bond
Okay.
fund and things like that. I'd probably be staying away from long term government bonds.
Okay. Jerry, it was great having a conversation like usual with you. I'm sure that people that are watching or listening, right now would like to follow up on this interview and, check you out. What's the best way for them to do so?
Yeah, the best thing they can do is just go over to followthemoney.com. If they go there right now, in fact, we have a Black Friday sale,
How about
50%
that?
off. Yeah,
Okay.
50% off all of our memberships. We have a gold, silver, and platinum plan, and there we have, I mean, just tons and tons of material for folks who want to learn how to trade, learn how to invest. We have charting solutions. We have webinars. We have stock lists, trading ideas, trading alerts. I mean, everything that they might want. Black Friday sale right now, followthemoney.com. And we're here to help. We're here to hold their hand, help them to learn how to invest, learn how to trade, and learn how to prosper in this wild economy.
Yeah, and Jerry's work is elite.
Thank you.
So I don't like to fade you. So that's the ultimate compliment is,
Thank, thank you, sir.
I used to look for people to fade, but you wouldn't be one of them. And I don't look for them anymore anyway. That's when my ego,
Right.
that's when, you know what ego stands for, edging God out, right? So that's when it
Yes,
was bigger.
indeed.
That's when it was bigger. So, brother, great talking to you before the holidays. You
Yes,
know, I,
likewise.
yeah, I hope you have a great final quarter, into the end of the year. And you and I will be talking in the brave new world next year.
Well,
I look forward to seeing how things play out and really appreciate your giving spirit to come here and lay it all out on the table for our community.
well, I appreciate the invite and I appreciate your good work, Dale. So thanks to you and your team.
Jerry Robinson, everyone, at Follow the Money, and find him on X at FTM Daily, and check out his, Black Friday, uh, Black Friday deal. So you don't even have to go out to the store to shop. Just click it. And good hunting, my friend.
Thank you.
All right, Jerry Robinson, everyone. It's going to be a wrap here. Join the team in 15 minutes on the Morning Edge. Remember, don't just count your pips, count your blessings. We're blessed to have guys like Jerry come in and lay it out on the line. He's been real right. And that's a wrap, everyone. Have a great afternoon, and we'll wrap up the week tomorrow. Okay? All right, people are thanking you, Jerry. They love your voice. Do you do karaoke too?
Yeah,
Are
I've
you a
yeah,
singer?
I've heard I have a face for radio and
I've
also a
heard,
voice.
yeah. Are you a singer?
I
Can you?
sing, yeah. I can sing, yeah, yeah,
All
yeah.
right. I figured,
Yeah, yeah.
anyway, we'll have to, I cover Elvis, so we'll
You
have to
do
do,
what you and I need to do an Elvis duo next
do
time
you
for the
do
folks.
Elvis?
Yeah, yeah,
Uh,
we can do
you
it.
know,
You can just pick a song, man. I know it.
if I said I needed you,
Oh, that's good. That's good.
you said you would always stay.
Yeah.
Huh?
Oh, how about
Yeah.
this
All
right here?
right. Go
Lord
ahead.
Almighty, I feel my
Oh,
temperature rising. Right?
better. Oh
Yeah, come
yeah.
on, man. Let's do it.
All right, Jerry. So we'll have to do it. You know what? We'll go on X Live
Don't let
and
me
do a
down,
little.
Dale. Let's do it.
Huh?
Let's
All
don't
right.
let me down. Let's do it.
All right. Let me know. We'll go on X Live. We'll talk markets and we'll intersperse different Elvis songs. So you're
I
really
love it.
doing well. All
You
right. So
well, you're pretty
we.
good, much. Yeah.
All right. Anyway, a little extra here on Face today. And anyway, Jared, great smiling with you, bro. All
Okay. Good to
right.
see you, buddy. Have a good one.
Crowd loved it. They loved the singing. All right, man. All
See ya.
right, everyone. Have a great day. Make it count. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.